integrity before a profit. Integrity before a profit, which means for me, I'll rather tell you the truth about what it is that you're getting involved with without making a profit. Now, I know that if I can help many people, teaching them and telling them the truth about the markets and the opportunities that the markets present, there is no way that collectively we will not make a profit, you see. So I believe in teach one, help one, and as you go along, always hold somebody up. Now, these markets have been kind to me. They have been good to me. And by being good to me, they have been good to so many people. And so in the past 7 years, my job has been to educate people, empower people, and also present to them opportunities that can change their lives and help better their destinies. And so we believe that through Fortune and what we're doing currently, a lot of people will benefit from it. And we know that in the next 5, in the next 10 years, with what is currently going on in the market, so many people's lives will be better because of what we're doing. And so tonight, I will just, ask you guys to bear with me for about 45 minutes and an hour or to an hour. I'm going to share some things with you guys that I believe will help you. It will help you to understand a bit more about the stock market. It will also help you to understand what it actually means to be an investor. And in the end, obviously, I will tell you how the work and the job that we've been doing at Fortune can actually help you to attain or achieve those particular financial goals that you have. And in the end, obviously, I'm going to take some questions from you. I've got some members of our team that are here. We're going to share some numbers at the end of this that you can obviously text to call us if you have any other questions thereafter. Okay? So I don't intend to bore you. I intend to encapsulate, but I also intend to educate you within the space of time that we do have. So permit me right now to share my screen with you so that we can, get into the swing of things so as not to waste time. I'm going to share my screen with you so you can see what I have prepared for you. You cannot hear me. Anybody else can hear me?
Yes, I'm hearing you.
Okay, thank you. I believe most people can hear me, but if you cannot hear me, maybe you should check your volume settings. Probably you need to adjust something on your volumes. But I believe most people can hear me because I can hear the echo from the back of most of you guys. So again, I'm going to share my screen with you so that we can go straight into what I prepared. So please let me know if you can see my screen.
Yes, I'm seeing your screen. I'm seeing Fortune Investment Partners with Forex Masters.
Excellent.
Together for prosperity.
Guys, what is... All right. Thank you. All right. So this is in partnership with Forex Masters. Forex Masters is one of my companies. And what we do is basically educate people on how to trade the Forex and the stock market. And Fortune Investment is also my baby. And with Fortune, our goal is to help build sustainable wealth by building or helping at least 100,000 people for every nation in Africa so that they can build wealth. So tonight, I will be sharing with you guys on the topic, why now is a good time to invest in the stock market. And you can see the caption that I put under there. The key to sustainable wealth is compounding capital. The key to sustainable wealth is compounding capital. If you don't learn how to compound your capital and compound the profits and the dividends that come out from that capital, it's going to be very difficult for you to actually build wealth that is sustainable. You may build wealth that is short-lived, but to actually build wealth that is sustainable, you need to learn, to be patient and compound your capital. And so tonight, I want to share a brief history of the stock market with each and every one of you. Now, the stock market is a $30 trillion market on a weekly basis. I mean, $30 trillion market. But it hasn't always been a $30 trillion market. The story started way back in 1602. To be precise, it started when the Dutch East Indian Company was established on the 20th of March, 1602. You see, back then, companies, usually traded by sending expeditions or sending ships on expeditions where they could buy, spices and gold and silver and precious metals and emeralds from across the globe. And then they will always bring it to the rich industrialized, to the rich European countries, and they will sell this for very high profits. You see, now, in those days, people who ate spices in Europe were very rich. Not everybody could afford to eat spices, you see. And so the Dutch East Indian Company, after it was established, it started sending, ships across Africa, to India, across to China, through parts of Africa, through parts of North Africa, and they would buy all of these exotic spices and bring some of these exotic animals like monkeys and gorillas and things like that, you see. And why they did that, when they brought these things to Europe, the people were so amazed to see the kind of species of animals that existed out there, and also to see the kind of, exotic foods that existed out there. And so people always paid very high prices, to buy, these goods. And so it was very, very profitable for companies that send ship across the world to buy these things so that they could bring and sell in Europe. You see, as the trade began to expand, the Dutch East Indian Company, it didn't have enough money to continually send more ships. So what the Dutch East Indian Company decided to do was to begin to go to coffee houses and walk on the streets and ask people to bring in money so that together from the money that is contributed by the people, they could build more ships and send more expeditions and send more men across the world to bring the spices and bring these exotic goods so that they could sell and make a profit. And so this was the origin. What they were doing, they didn't even realize, because when these people contributed their money, they own a part of the profits that those ships are going to generate. And this was the origin of how the stock market actually emerged and began. I can hear some noise in the back. Please just mute yourself so that you don't disturb others.
So maybe it will be okay, since you are the host, you can trace the noise and then you mute the person, because yes, I think you have.
That's what I've just done.
Oh, thank you.
Mm-hmm. So when these companies, when these ships returned, all those who contributed money to build the ship and to send it across the world, they shared in the profits that were generated, you see. So, but later on in 1760, I'm sure most of you have heard about the Rothschild dynasty. In 1760, Mayer Amschel Rothschild, who was founded the banking, he founded the Rothschild dynasty. What he decided to do was to take this idea to a different level altogether. He decided to start creating bonds. He will sell these bonds to private individuals, and these private individuals will give him money, and then he will take this money, he will lend this money to the various royal families across Europe. And these royal families needed this money because they wanted to buy arms, because Europe was always engaging in war in those days. And because of this, what the Rothschild family eventually did, just one second, let me find out. What this Rothschild family eventually did was they established a proper mechanism. They established a proper mechanism that will become the foundation of the modern day stock market. You see, and today, this family alone contributes or controls almost a lot. It controls through this establishment of the stock market and the basic principles of the stock market. The Rothschild family basically has, a hand in most of the banks and in most of the central banks across the whole world, you see, because they were at the very foundation, setting in the principles, the modalities by which this market were going to guys, I can hear a lot of
hey, I'm here.
All right. So these guys, so the Rothschild family, they actually organized the markets. They organized the markets and they brought in order into the markets. And through them, we have the stock market as we now know it. And through them also, we can now see various stock exchanges across the whole world. From the London Stock Exchange across to the New York Stock Exchange, even in Cameroon and the Sema region, we have what we call the BVMAC, Stock Exchange. But thanks to, first of all, the activities of the Dutch East Indian Company, which started from the 1600s. And actually, as history goes, the Dutch East Indian Company, by the time it actually collapsed, it was valued at, in today's money, $7 trillion. In perspective, Apple is only worth $2 trillion. But back then, the Dutch East Indian Company was so big, if you had to convert it into today's money, it was actually worth over $7 trillion. So this is just a synopsis of, the origin of the stock market. Now, what is actually the stock market? When we talk about the stock market, what is it? What is it all about? You see, many people don't actually know what it is. So the stock market or the equity market is the aggregation of buyers and sellers of stocks or shares. Basically, it's like a place where people go to buy and sell, the shares of companies. The stocks are listed and traded on a stock exchange, which are entities of a corporation or mutual organization specialized in the business of bringing buyers and sellers of the organizations to a listing of stocks and securities together. Now, let me, not to bore you with all the terminology, I will just try to explain it in terms that you can actually understand. What this is basically saying is this. A stock market is, take for instance, it's like in Cameroon, we have our local markets, or across Africa, we have our local markets. In these local markets, people who have tomatoes, they take it there. People who have potatoes, they take it there. People who have fish, they take it there. People who have meat, they take it there. And you who has the money, you come to that market and you buy whatever it is that you need. If you want meat, you buy meat. If you want potatoes, you buy potatoes. Now, what is a stock market is a place where people go to buy and sell. Rather than buying physical commodities or physical assets, they go to buy and sell units or part ownership in other companies. You see, so for instance, in the London Stock Exchange, for instance, if a company like Tesco or Asda or a company like BHP Billiton, or let's say a company like Fortune, if we want to raise money, we can come to the London Stock Exchange and say we want to raise £100 million. Now, for this £100 million, we want to sell 1 million shares in Fortune. Now, what the London Stock Exchange would then do, would then take it to the market participants and say, there is a new company here that is looking to raise 100 million. They need 100 million because they want to expand and they want to grow so that they can also increase their market share and their value. Now, for this 100 million that they're looking for, they want to sell 100 million shares or they want to sell 1 million shares. Now, these shares are then listed on the stock exchange. Now, you don't need to come to Fortune to buy those shares. You can go directly on the exchange now and you can buy those shares, you see. So this is basically what a stock exchange market is all about. It's a place where people go to raise money, and for them to be able to raise that money, they need to sell their shares or they need to sell part ownership in their companies. And when you sell those shares, the people who buy those shares, they become part owners in your company. For example, I have some Tesla shares and I have some Apple shares. That makes me a shareholder in Tesla and a shareholder in Apple. Now, depending on the stake that I have, which is basically saying depending on the number of shares that I have or that I own, I can attend the shareholders meeting and I can vote in those meetings and say, I don't want Elon Musk as the CEO, or I love Elon Musk as the CEO, so I give him my backing to continually to be the CEO of Tesla, you see. So these are some of the things, you know, that happen when you own a unit or when you partly own a stock or a share. So now let's look at the advantages of investing in stocks. Let's look at the advantages of investing in stocks. The advantages, one of the main advantages of investing in stocks is that of part ownership. Once you invest in a stock, as an investor in shares, you own a unit of that company. This means you can be in Cameroon and own businesses in the US, in the UK, or around the world. And this makes you a shareholder. Now, I can tell you that of all the billionaires that we know of today and all the people that are worth, you know, millions and tens of millions and hundreds of millions, you know, none of them is worth that much without owning a share or without owning a company, without owning shares in other companies or themselves having their own company and they own the shares of those companies. There is none, you see. So when you invest in stocks, you become a shareholder. You become a part owner in that company, which means the more the company grows, the more your net worth also grows, the more your capital grows, you see. The second advantage is you make money two ways. Now, when you, as an investor in a company shares, you become a shareholder or part owner of that company, and that entitles you to a share in the profits of the company. This is commonly called dividends. And you also make money as the company grows and its value increases in what we call capital or stock appreciation. When you invest enough money into stocks, you can live off dividends while the capital appreciation continually makes you richer. Now, this is the awesome thing about investing in stocks. You make money two ways. You make money when the company makes their profits and they have to obviously, you know, pay out part of that profits to you because you're a part owner. That is called dividends. And you also make money when the shares of the company go up or when the value of the company goes up. So for example, let's say for instance, you decide to buy, 1,000 shares from Fortune and you invest, say, 10 million, or let's say you invest 1 million. Now, when you invest 1 million, you get dividends. And the base rate of our dividends starts at 8% annually. But that 8% is just the beginning. As the value of Fortune continually grows, so too does your capital continually grow. Now, you may have bought one share of Fortune at, say, 70,000. In the next 2 years, one share may actually cost, 100,000, you see. So even in the next 2 years, your shares have grown from 70,000 a share to 100,000. It actually means that your capital has appreciated. But in the space of that 2 years, you also get dividends on an annual basis, you see. And so you can decide to say, okay, hey, listen, I want to sell some of these shares to cash in some profits. Or you'd be like, well, I'm okay with the 8% dividends that I'm receiving on an annual basis, so I will leave my capital to continually increase and continually grow. You see, so this is one of the other major advantage of investing in stocks. The third one is it allows you to beat inflation. Now, oftentimes people don't consider what inflation does to them. Inflation is one of the highest things that makes people poor without them actually knowing. It sneaks up on you without you actually knowing. Now, what is inflation? Is the appreciation in the value of goods and services on a year-by-year basis. For example, in Cameroon today, for instance, the inflation rate is 2.8%. Now, let's look at this. Most banks in Cameroon, they give you an interest of 2.5% every year. But inflation is actually 2.8%. So by the time they give you 2.5% in interest rates, and you're spending an average of 2.8%, more year on year, it actually means that you're losing 0.3% on your savings every year. However, what smart people then do is they'll be like, you know what? I want to beat inflation. So what they do is they invest in stocks. Why? Because stocks, they pay you in two ways, like I said before. You get dividends, which are usually higher than the interest rates, and you also get capital appreciation. For example, let's say, for instance, you have, 1 million francs in Ecobank, and Ecobank gives you 2.5% interest on your 1 million francs, which is basically, is it 25,000 or so? So, so which is basically, give or take, 25,000. Now, on 25,000, your inflation rate is actually 2.8%, which is basically 28,000. So you're actually losing 3,000 francs on your savings every year if you kept your money with Ecobank. On the other hand, if you took that same 1 million and you say, you know what, I want to invest in stocks, and you invested with Fortune. Fortune gives you a base dividend of 8%. Now, with 8% on 1 million, that is 80,000 that you're making every single year. Now, out of the 80,000, even if you take out the 2.8%, you see, you're still left with around 5.2% in net profit. Now, that is a smart decision. The second opportunity is that 1 million may actually grow in that year from 1 million to 1.2 million or to 1.3 million or to, whatever amount. This is the potential of investing in the stock market. So it allows you to beat inflation, and it also allows you the extra bonus of capital appreciation without the unnecessary risk and volatility that other markets like FX or crypto or whichever one offers, you see. And the fourth one is it allows you to take advantage of a growing economy. It allows you to take advantage of a growing economy. Now, this fourth one is very important, very important. In the year 2010, for instance, the U.S. economy was around, in the year 2010, the U.S. economy was around 9 trillion. Today, the U.S. economy is almost $16 trillion, which means that the U.S. economy is growing year on year. Now, the Cameroon economy back then was around, I think it was 2010, the Cameroonian economy, it was around, in terms of GDP, nominal GDP, back then it was around 23 billion. As of yesterday, when I was cross-checking, the Cameroonian economy has grown to around 38.5 billion. You see. Now, when you invest in stocks, it allows you to grow as the economy is growing. You see, because as the economies grow, so too does the value of companies grow, because people begin to spend more. And as people begin to spend more, they start looking for places to invest. And as the people continue to invest in companies, so too does the value of those companies continually increase over a given period of time. And so it definitely then allows you, to continually increase. It allows you it allows your capital to continually increase and grow as the economy continually grows, you see. So these are the four primary examples or primary advantages of why it is important for you to invest in the stock market. Now, this is going to be the core of why we are here today, okay? This is going to be the core of why we are here today. Why now? Why do I believe that now is a good time to buy stocks? Now, just to give you perspective of what has been going on in the stock market, just this year alone, okay? This year alone, first of all, we saw around $13 trillion wiped off the face of, the global economy. $13 trillion wiped off. But as I speak to you right now, the world is actually, coming back, recovering from the losses of the pandemic, from the losses that coronavirus actually caused, since March up till now. We're actually seeing a massive recovery. And this massive recovery is spurred on by technology companies. Companies like Apple have broken limits and broken records in modern time. Apple is now worth 2-point-something trillion. Companies like Tesla is breaking all records. You see, companies like Amazon is continually growing. Alibaba is continually growing. We are seeing a massive influx of capital into tech companies. Tech companies are what, they're the companies that are driving the current growth that we are seeing in the global economy. However, other industries are still suffering, especially aviation. The aviation industry is suffering quite a lot right now. Tech, companies that deal with manufacturing of airplanes and air travel and insurance and things like this, they are suffering right now. Another sector that we are seeing taking a hit is the energy sector. Oil and gas sector is taking a massive hit as we speak right now. And all of these are opportunities for the long-term investors who see what others do not see as we speak. You see. So today, I wanted to share with you just 5 reasons why I believe that now is a good time to invest or to buy stocks. And one of the main reasons why is because stocks continually return an average of 9% annually, at least for the past 78 years. So for the past 78 years, the stock market has continually returned at least 9% in profits and dividends annually for the past 78 years. And this was actually a statement made by David Cass, a finance professor at Maryland University. You see, now David Cass is, he's a very sound finance professor. And most people who follow him and follow his analogies, they know the depths of understanding of the market that he has. And if you look at it, the S&P 500, which is the Standard & Poor's 500, basically it's an index that lists the 500 biggest companies in the US. So the S&P 500 has achieved positive returns 8% of the years from 1942 to 2019. This is over 78 years of consistency. Over 80% of the years from 1942 till today, the S&P has achieved positive returns. Now, if you look at where the market is going right now, if you look at where the world is going right now, companies are increasingly, gaining grounds because of new technologies that are emerging. These technologies are helping companies to become more efficient. And when companies become more efficient, they cut their costs. And when they cut their costs, profitability or profit margins increase. And if we have seen, in the past 7 years, for instance, the same Dow Jones has returned an average of 23% return year on year in the past 7 years. Now that is a lot. That is a lot. If you actually understand the concept of proper investments, you know that 23% a year, that is a lot. You see, now, because of what the coronavirus has done, it has actually presented us, presented us a very good opportunity or very good entry points for us to engage in the stock market. Why? Because if you calculate 9% year on year for the past 78 years, if you compound that, boy, that's a lot of money you would make even if you invested just $1 million francs.
It's good.
The second reason
call over internet.
The second reason why I believe now is a good time to invest in the stock market is this. Valuations are lower. Valuations basically mean the value of companies have become lower, which definitely means that companies that used to cost a lot now cost cheaper. Since the pandemic began in March of this year, most companies, except a few tech stocks, have seen their value depreciate by as much as 30% or 40%. Most companies have seen their value depreciate by 30 to 40, some even 60%. You see, so investing now means you can buy stocks at cheaper rates. For example, Boeing, who is like one of the biggest company in the aviation industry, their shares used to trade at around $400 a share. Now, those same shares are trading at around $170 a share. You see, that is close to 60% depreciation in the value of Boeing. You see, so any knowledgeable investor will be looking to take some shares or buy some shares in a company like Boeing. But Boeing is just one of those companies. There are several others in the stock market that have been affected by the coronavirus. Like I said before, energy stocks, aviation industry stocks have been grossly affected by the coronavirus. Supply chain, stocks, they have been, grossly affected. And so because of the cheaper valuations that we have right now, it's actually a great time for you to get involved in the stock market. The third reason why I believe now is a good time to get involved is because it helps you beat inflation. Have you seen the inflations lately? In the UK, inflation has jumped. Inflation used to be 1-point-something%. Now inflation is getting to 3% in the UK. So the cost of goods and services are becoming extremely high and expensive because of the impact of the coronavirus. And it's not just in Cameroon, it's across the world. I remember, there's a place just around me here. I used to go and buy, kebab. I do like kebab. I used to go there and buy kebab for £5. Yesterday I went to buy kebab, and the same size kebab that I used to buy for £5, now they are selling it for £7. I looked at the guy, and I was like, what happened? It was like coronavirus. I think he's part of these Middle Eastern guys. It's like coronavirus. I thought, what? Did the coronavirus attack the kebab as well? It was like, no, things are very expensive. Meat is expensive. It is expensive. But this is just somebody in the quarters. Now, if you go across the world, if you look across the world and you look across the various nations, you will realize that inflation has jumped up by an average of 1.5% across the whole world. Now, that's a big jump. That's a big jump. So for you, therefore, making money, for you to be profitable, for you to actually have some money left after the cost of inflation, you need to be so much smarter with your money and how you manage your money. And one of the ways to do that is by investing in stocks. This is why I believe that right now is a very good time to get involved in the stock market. Why? Because first of all, the valuations are cheaper. Secondly, some of these stocks, they pay great dividends. Some stocks pay 5% in dividends annually, others pay 8%, others pay 11%, others pay 15%. Some stocks even pay up to 18% annually in dividends. Now that's a lot. That's a lot. Considering that the risk you have is, underlined in the company itself, which means for you to actually lose your money, the company needs to go bankrupt, you see. But if you choose stocks carefully, correctly, after doing your proper due diligence, looking at their past records, looking at their future projects, looking at their pipeline, looking at their financial statements, understanding their earnings ratio, understanding actually the assets that they have to the potential asset or to the potential growth and value that they can actually have. If you do your proper analysis, you can choose some very good gems to invest in. And this is why I believe right now is a great opportunity, or offers a great opportunity for people to invest in the stock market, because it allows you to beat inflation. For instance, just take out, for instance, if you are buying shares in Fortune, for instance, the base rate is 8% in dividends. Now, 8%, even if the inflation in Cameroon has gone up to 3.5%, with about 4.5% net, at the end of the year. That's excluding capital appreciation. There are some stocks that I invested in this year that returned me in excess of 330% in 1 year. In fact, from March up till now, 330% return from one single stock. You see. Now, there are opportunities like that, and I actually believe that now is a good time for you to make your play, for you to make your move in the stock market. The fourth reason why I believe now is a great time to invest in the stock market is because companies are splitting their shares. Some of the most high growth, the high growth companies like Tesla and Apple, and Google, they are looking to split their shares. Now, when a company splits their shares, they are making it cheaper so that smaller investors can, buy in to the company. For example, Tesla is doing a 5-for-1 split of Tesla shares that will go into effect from 31st of August. Apple is doing a 2-for-1 split of Apple shares that will go into effect from the 31st of August. Now, what does that mean? Apple shares currently are trading at around $500 a share. $500. Not everybody can afford to have $500. So they are saying we are going to split that into two. So if you owned one share of Apple at $500 a share, after the stock split, you will actually own two shares. But if you didn't own any shares in Apple, instead of you buying one share for $500, now after the split, you will be able to buy one Apple share for $250. You see, so Apple shares will become cheaper, allowing people, smaller investors to get on board. And these companies are very smart when they do this, because when you reduce the value, you get more people to come and buy. And the more people buy, the more the value of the company begins to increase. You see, I was reading an article yesterday, I think it was on the Wall Street Journal, where Tim Cook, who is the current CEO of Apple, he sold Apple shares. He sold Apple shares worth $132 million. Why did he sell Apple shares? Because he knows that once the stock split goes into effect from the 31st of August, he can come in again and buy many more Apple shares at a very cheaper rate. And this is how these people continually make money. And why don't you yourself also come on board with the help of a company that understands how to do this and begin to build equity for yourself in great companies like Apple? I can tell you the people that even Warren Buffett, who says he doesn't want to get involved with tech companies, Warren Buffett is a massive investor in Apple. In fact, his company, Berkshire Hathaway, is the 4th largest investor in Apple. Now, what does this teach you? What does this tell us? This basically tells us the importance and the opportunities that when a company like Apple is doing a stock split, it tells us about the opportunity this offers for smaller investors or for people like you and for me, to come in and buy in on these amazing opportunities. So company stock splits, they present great opportunities. And the 2 notable examples that I can tell you are Tesla and Apple. And these 2 companies, the way they are going, I see their valuations. I see Tesla becoming a $1 trillion company as well. I see Apple going to, $5 trillion. I see. So these are great opportunities, and I believe that our people need to also take advantage of great opportunities like this. You see, oftentimes, towards the end, I will tell you how you can participate or how you can, get involved to take, or to seize the opportunities that are presented by these companies. So the 5th reason why I believe now is the time to get involved is, the stock market brings income to you at a relatively safer, or at minimal risks. It allows you to generate income. It allows you to get income in dividends, at risk, which are not compared to other markets like Forex or crypto or some of these funny platforms that I see in Cameroon promising to make you 600% a year. When people like Warren Buffett are very happy, with 8% return a year, So the stock market can help you to build income. It can help you to build income portfolios. It can help you to build sustainable wealth without necessarily risking, or taking unnecessary risk on your capital. Because as an investor, your primary objective is to protect your capital. This is your primary objective as an investor. Your primary objective as an investor is to protect your capital. After you protect your capital, then you can think about what sort of returns you want for your capital. This is very important. And most people, they only think of, what do I make from my money? How soon do you pay me? That is not the mindset of an investor. That's the mindset of a gambler. I'm sorry to say it, that most people are gamblers and not investors. As an investor, you have a pre-calculated, and a predetermined risk, and you accept it, and then you go in search of profits. But you must also have adequate knowledge to decide what you want to invest in. Oftentimes, if you don't know what to invest in, you can seek genuine people who have the knowledge, who can actually guide you, not charlatans who promise to make you rich overnight. So now is a great time for you to invest in the stock market. And the kind of investments I'm talking about is not the one that you invest today and you expect it to give you profits tomorrow. No. If you had invested $1,000 in Tesla in the year 2010, that $1,000 today would be worth in excess of $90,000 in the 10-year period. The question is, can you wait 10 years? Even if it doesn't give you, 90,000, even if it gives you another 1,000 or gives you another 2,000, can you wait that time, that long? That's where the difference is made between building sustainable wealth and just seeking to gamble And when you seek to gamble, you always lose money. So these are the 5 main reasons why I believe now is a great time for you to invest in the stock market. So how can you get involved? Because after telling you all of this, how can you then participate in the stock market? How can you own these shares? Here I have given 5 different ways. 1, you can own a brokerage account. This brokerage account is offered by brokers, that pull in liquidity from the various exchanges. There are many brokers out there. We have one ourselves, and it's called Apollo Markets. But there are so many others out there that can allow you to be able to do that. The second thing is you can buy these stocks and shares through your banks. If you have a bank, you can buy stocks and shares through them. In Europe and America, you can invest through what we call a stock or a share ISA, or directly through your bank's dealing desks. Now, the third way is you can invest through hedge funds. You can invest through a hedge fund which manages your money and invest on your behalf. The fourth way is you can invest in what we call a UCIT, or an undertaking for collective investments in securities. This is usually offered by investment firms like Fortune. So Fortune is more or less an investment and a wealth management firm. We offer UCITs, and we also act as a hedge fund where we manage or we trade money on behalf of clients. Okay, so these are the ways by which you can participate or you can invest in the stock market. So now, how can Fortune help you build wealth? Now, this is a very important part. How can Fortune help you build wealth? Basically, how can myself, my team, which you're going to see towards the end, I've got a great team. How can we help you to build wealth? How can we help you, to buy these shares or own these shares, over the next coming decade or over the next coming 20 years that can allow you to build wealth? So let's look at that. So Fortune Investment and Wealth Management is an investment firm that helps you build a long-term income generating portfolio. Our goal is to help every individual become wealthy by owning shares in various companies, not just at home, but also globally. We want you to own a piece of the American dream from where you are. Own great British and European companies and share in the growth and profits. We do this by offering 3 products. We have a UCIT fund called the Equity Fund, an automatic savings scheme called the FASA, and we have a 401k SIP, or self-invested personal pension. By buying a share in one of our funds, you become a part owner of all the companies we invest in and get dividends in the region of 8% plus an added advantage of capital appreciation year on year. Now, just to explain that a little bit more, our objective, our goal is to help you own shares in stocks and shares or in companies globally. You can be in Cameroon, you can be in Nigeria, and you can be a shareholder in American companies, you can be a shareholder in European companies, you can be a shareholder in Chinese companies, you can be a shareholder in CEMAC region companies. Now, how do we do that? We have various products that we structured that can allow you to be able to do so. One of them is a UCIT fund, which is an undertaking for collective investments in securities. Now, what this does is we have people who buy shares from this fund. Now, by buying shares from this fund, what you're saying is you're giving us, money and owning a unit or owning a share of that fund. Whatever profits that fund generates, you are entitled to dividends. Dividends are basically your share of profits in any venture or in any company that you invest in. So you get dividends. With us, our dividend rates start at 8% because we invest in companies that pay an average of 8% in dividends annually. Now you get dividends for every share that you get 8% for every share that you own. And you also get the additional advantage of capital appreciation in the companies whose shares we've invested in. Say for instance, if we invest in Apple and Apple appreciates 50% in that year, your capital invested through us or with us in Apple also appreciates 50% in that year. And this is your money less what we charge for fund management. You see, this is one of the ways. Now, for people who are looking to save their money or to build a retirement plan, we call it a self-invested personal pension. If they're saying we don't trust our government, like for me, I don't trust the Cameroon government to pay me pension or pay anybody pension. You know, for people like this, they can say, you know what, we want to invest some money through Fortune that can take care of us when we can no longer work in the next 20 years or 5 years or whatever number of years. What we do is we take that money, we invest it in companies that have a long history of sustainable wealth, a long history of sustainable growth. And this will compound year on year. If you want, you can compound your dividend, or you can just let your capital appreciation compound year on year. And when you get to a certain, age and you can no longer work, you can pull out all of this money, or you can have a payment scheme in place where we pay you every single month a specific amount that you can live on or that you can dwell on. So this is called a self-invested personal pension that you can do. We want to bring this concept to our people because we know that oftentimes in Africa, I don't know whether it's fortunate or unfortunate, parents only depend on their children when they're old. And this isn't right because some of these children are struggling with their families. Who do they take care of? Their families, their children, or they're taking care of their mommy or their daddy because they are old and can no longer do anything. So we want to change this. And this is why we, came up with this innovative idea of a self-invested personal pension where those who are working now, especially those of us who are young now, we can start investing towards our retirement while we are still able to right now. I was telling my staff the other day, soon I was in my teens and I thought the world was when I was in my teens. Then before I opened my eyes, I was in my 20s. Soon I was in my late 20s, and then I got to 30 and I was like, how is this happening? No, I'm getting to 40 now. I'm getting to 40 and I'm looking back, I'm asking like, God, what is going on? And God is like, you're getting old. So I need to be preparing, not just for me. I need to be preparing for my children. I need to be preparing for my grandchildren. The Bible says a good man leaves an inheritance for his grandchildren, not just your children. So I need to do what is right. And how can I do that? I need to start planning now. I have been planning, but I need to keep on planning. I need to keep on sowing towards their future and also my future, because I wonder when my children are 18, they should leave my house so that I can enjoy myself with my wife. We can go on holiday around the world. We can see whatever. They should be self-sustainable, not dependent on me. And I should not be depending on them when I'm 80 years of age or I'm 90 years of age. I should be self-sufficient, you see. Now, for you to actually achieve those kind of financial goals, you need to start now. But we are saying it's not just about tomorrow. There is a portfolio, which is the equity portfolio, which can take care of you now. It can take care of you now, take care of your quarterly financial needs, annual financial needs now, while also growing year on year to also become something substantial for you and your family when you get old. Now, this is what we call sustainable wealth. This is our goal. This is why we exist. And this is what we want to help you to achieve as time goes on. So this is how Fortune can help you. Now, the advantages of investing with Fortune. The first advantage is you don't need to be an expert. No. You don't need to be knowledgeable about, you don't need 10 years. You don't need an MBA in finance or, to have studied the stock market for over a decade. You don't need to be an expert. No, we do that for you. And we've got a very competent team, which I will be introducing to you shortly. And secondly, you don't need to have much money, because one share in the Fortune Equity Fund starts at $100. So you can just buy one share. Of course, it's not going to make you rich, but at least you will have one share, we are true to our motto, which states integrity before a profit. And I can tell you, God knows, I will never willingly lead anybody into something which I know is not sustainable. I will not lead anybody willingly, knowingly, into something which I know is not sustainable. God forbid that. So, and that is why our motto states integrity before a profit. So before I think of making a profit, I first of all ask myself, am I adding value to you? How is what I'm doing going to help you as an individual? How will it change your life for the better? Will you be better because you met me, or will you be worse off because you met me? And so I always intend to grow people and add value to people before thinking of what that can get me, you see. And that is one of the main reasons why we stand out in Cameroon, you see. The fourth reason is we have regular free education, free of charge about the markets, for our investors. Like this one today is free of charge. I'm sure you have learned something, one thing or you learn a thing or two. You see, we constantly educate our people. Like I said, it's all about education, because the more you know, the better you will become if you apply what you know. Knowing is okay, but until you apply, your life will not be better. Knowledge in itself is useless. Knowledge applied is power. That's the difference. And then the fifth one is an opportunity to invest for long term with confidence in our methods and professionalism. You can invest with us and sleep peacefully like a baby every night, knowing that your money is managed in a professional way. And there is nothing that can ever happen without you knowing what is going on with your money. You don't just send us your money and then you go and sleep, No, it doesn't work like that. It doesn't work like that. When you invest with us, you are part of us. You are part of the company, because you are investing to buy shares in the company. So you need to know what is happening with the company. And this is how we choose to grow. We want to grow together, not just individually, you see. And so these are some of the advantages, that you have if you invest with Fortune. So here is how the company is structured, because it's good that you understand the structure of the company. So the mother company is the Gecht & Co Group, which is a company that has been existing in Cameroon since 2015. And the Gecht & Co Group, is the mother Fortune, is the mother company of Fortune Investment and Wealth Management. And Fortune Investment and Wealth Management has 5 principal funds, 2 of them which we are putting on hold because they are very risky and the mindset of the people hasn't yet adapted to that. But it has 5 principal funds. We have the Fortune Equity Fund, which is based in Cameroon, the Fortune FX Fund, the Fortune Investment Network Fund, the Fortune Savings Account or Bond Fund, which is called FASA, and we have the Fortune SIPs or Invested Personal Pensions. So this is how our company is structured, and the mother company is the Gecht & Co Group. The Gecht & Co Group is a big conglomerate that helps in the finance sector, banking, capital raising, the debt market, business structuring, and growth and expansion into Africa or across the various African countries. And so now this is our team. So we have here the executive directors. You have myself, a CEO and founder. I have a few other companies, Apollo Markets, and there's a platform which I told you guys about in the beginning, which is POSEC Africa. Education-wise, UK MBA from the Cardiff University, and with 10 years plus investment experience. You have Adam. Adam is a colleague that I've met. I'm sure most of you've heard of Salesforce. How many of you have heard of Salesforce? How many of you have heard of Salesforce? Okay, so Salesforce is a massive company that provides tech around work, environment, and investment. Adam is the director of Salesforce, and he and I, we're working on this together. He also has an MBA from Warwick Business School. He's coming in mostly for strategic business management. That's his area of expertise. You have Karim Ali. Karim has over 20 years, on investments, on the buy and sell side of investment technology. He's a co-founder and a managing partner of Simba Technologies. He's the chief operating officer of Framework Private Equity. He's he's got accreditations from the Chartered Institute for Securities and Investments. He's got a UK BSc in Computer Science and Brunei University. So this is, Karim Ali, and he is a member of our team. So yeah, I'm showing you all of these teams so that you know how strong the team behind Fortune is. We are not in Fortune to mess about. We are actually, we mean business, and we truly want to help our people. You have Elena. So Elena has, more than 20 years experience in investment banking and asset management, in operational management of hedge funds. She's the founder of, FinTech for Funds, and she's also studied in Oxford University. She's got a UK, she's got an MBA from the University of Hull. And Christina will be acting as a co-CEO with myself. And then you have Christian. Christian has in excess of 15 years, buy-side and sell-side investment management and technology. He's worked for massive operations like Ernst & Young. He's worked with Schroders. He's, into technology and management advisory. He's got an MSc from Kingston University, IMC and CFA level 1 qualifications from, here in the UK. And then the last one, you've got who will be acting as our CFO, basically our chief finance officer is going to be Victor Campbell. And Victor has in excess of 12 years experience in investments and real estate. His area of expertise is corporate strategy, and currently he is a director at BNP Paribas. How many of you have heard of BNP Paribas? Anybody heard of BNP Paribas? They manage in excess of $2 trillion in assets. And Victor is a director in BNP Paribas. And, he's got an MSc in economics from Birkbeck University here in the UK, you see. So this is the team that we have in place at Fortune. As you can see, none of these people, out of these 6 people that are presented to you, each and every one of them either has an MSc or they have an MBA in a specific field. And it's very important. It's very important because what we intend to do in Cameroon and the CEMAC region and Africa as a whole is to transform the investment market or investment banking sector and wealth management sector, is to actually help people to build wealth sustainably. And we want to help our people. When I shared this project with, somebody like Victor, for instance, Victor, they are managing in excess of $2 trillion. I'm talking $2 trillion assets under management. What would make him want to join me, on a project in in Cameroon and the Semak region. What will make him want to join me? You see, what made him join, first of all, is because of my integrity. Like when I tell you something, I mean what I tell you. I will never tell you something and come back and say, oh, this or oh, that. I will never mislead anybody. And secondly, because of the vision that we have for our people and the impact that we intend to create in our economy and the economies of the Semak region. We have a very strong team, and this team comes with wealth of knowledge and experience and expertise that will help you, because our success in the end is your success. You know, the more profitable we become, the more profitable you become. And so, ladies and gents, this is the team, this is Fortune, this is what we do. And I believe now is a very good time for you to get involved in the stock market. So I will take, some questions right now. I will take some questions. If you do have a question, please just raise your hand. I will stop sharing my screen. But before I do that, maybe okay, guys. I've got some questions here already. Can you explain what an EFTs are and what advantages they have over stocks? So this is from Kengong Eric. Well, it's not an EFT, it's ETFs. This is how you call them, first of all. It's not EFT, it's ETFs. ETFs are basically exchange-traded funds. Basically, exchange-traded funds are basically when you hold, it's a fund that holds different stocks within specific exchanges. So the fund may hold maybe a basket of stocks from NASDAQ, hold a basket of stocks from S&P 500, hold a basket of stocks from the London Stock Exchange, you say. So it's a combination. It holds baskets of stocks from various exchanges, and then it sells shares to you. So you can then buy a share from that exchange traded fund. And so based on the value of the fund, is the value of your investment or your capital, you see. So this is the difference. Now, a stock is just you're buying an individual company shares. Exchange traded funds are baskets of individual companies that have been pulled together from various different exchanges. You see, let's say for instance, we can constitute an exchange traded fund within Fortune. And so out of that exchange traded funds, we will have 5 tech companies, 5 pharmaceutical companies, 5 agricultural companies, 5 energy companies, and then once we constitute that basket, we will then, sell UCITS, sell our shares to own this particular basket. So you buy a share to own this. Now, based on the performance of this, is the performance of the shares that you hold in this ETF or in this exchange traded fund. Now, a stock, like I've explained before, is just a unit ownership in a single company. For example, you can own a share of Apple. This is a stock. I hope that explains that. And then you're asking what is a net asset value. Net asset value at the end of the day is just let's say for instance is the net assets after subscriptions and redemptions. Let's say for instance you have there's a hedge fund or an investment firm. You always have the NAV underneath, which is the net asset value. It tells you on that day, what the overall holding of that company is. You see, after people may subscribe, people may redeem, So after people subscribe, which is basically investing, and after people redeem, which is basically withdrawing their capital, it then gives you the net asset value of that company, of that fund on that day. This is what it actually is. Okay. What's the difference between shares and bonds? Okay, thank you very much. Shares are basically ownership. You own a part of the company. A bond is an IOU. It's a debt. You see, let's say, for instance, I can raise capital in two ways. I can raise capital either using bonds or using, selling shares. If I sell shares, it means I want you to be a part owner. So you take whatever risk that I take as a company, you share in that risk. Whatever profit I make as a company, you make as well. But if I sell a bond is me saying, you borrow me some money and I'm going to pay you this amount of interest. I'm going to pay you this amount of interest for the money that you borrowed me. You see, a bond is basically a debt that a company sells or a country sells in order to raise capital. You see, that's the difference. So a share allows you ownership in a company, and you can vote. You as a shareholder, you are allowed to vote. You can decide the fate of the company. But if you own a bond, you cannot vote. You're not a shareholder. A bond is just, you lend money to the company or you lend money to the government, and after the agreed period of time, they pay it back to you plus the interest agreed. What is the amount? Okay, this is from Anita. What is the amount of the fee I need to pay Fortune for managing my account? Okay, Anita, first of all, upon subscription, we have there's a subscription fee of 5% or 10%. If 5% if you're investing below, 10% if you're investing below $10,000, and 5% if you're investing above $10,000. You see, this is the subscription fee. Now, on an annual basis, there is a 2% management fee. It's just 2% management fee on an annual ongoing basis. So the subscription is when you're entering, when you're subscribing into Fortune. So this allows us to set you up and do with all the tech platforms that we have, and we need to set you up. It covers all of those costs and things like that. But this is just one-off when you're entering or when you're coming on board. Now, on an annual basis, there is a 2% management fee. I hope you understand. Okay. All right. Okay, any other question? Okay, somebody's asking if you have share certificates for the actual shares. Now, when you invest with us, yes, you get share certificates. And on the share certificate, we state, how many shares you bought and how many shares you own. Obviously, every share certificate issued has a digital signature, so, nobody can, fake them or, come up with scams about them. So yes, we do issue share certificates. And on our platform, yes, we issue share certificates. Okay, somebody's asking, do we issue share certificates, of companies bought through us? Now, in the stock exchanges, they don't issue share certificates, no. If you go on New York Stock Exchange and you buy shares of Apple, nobody gives you a share certificate. All of these are done electronically. You get confirmations. You get digital confirmations, that you hold these positions, and you can see it on your back office anyway. And it's the same thing with us. When you buy shares, you see it on your back end, and on our CRM that you guys are going to have on your client back office, you're going to see the number of shares, the companies that we've invested in. You will see the top 10 holdings that the company holds, and obviously you will see in your own back office how many shares you bought, and you will see the distribution of the capital, and in which companies that your money has actually gone to. And so at the end of the day, it then gives you the overall NAV, which is the net asset value, so you can see overall what the NAV is. Yes, if you want to speak or say something verbally, you can unmute yourself and ask me a question if you want to verbally. Okay, somebody is asking, what if there is a crash in the economy? If there is a crash in the economy, then there is a crash in the economy. Now, if you invest in a company, even if there is a crash and the value in the shares go down, it doesn't mean you've lost your money. It only means that the value of your shares are worth less, than the amount that you paid for it, because you still own a share of that company. If you bought Apple shares at $500 a share, and those Apple shares went to $450 a share, it doesn't mean that you actually lost money. It only means that the value of Apple has gone down. And what does that mean? It means that you still own one share of Apple. You haven't lost money, So this is the difference between stocks and maybe other forms of investments like currencies or cryptos or whichever ones, you see. When you own a piece of a company, you own a piece of the company. Even if the value reduces, maybe you paid $1,000 for a share and now it is worth $800. Yes, the value has depreciated by $200, but you still own one unit in that company. You still own one share in that company, you see. Now, over time, like we've seen from the very beginning, the stock market returns an average of around 9% year on year. So which means that if you kept holding for a sustainable period of time, you have the probability to make back, that money and also have your capital appreciate over time. Any other questions, guys? Hello, Chantal.
Yeah. Good evening, Gerald, and good evening to everybody.
Yeah, I can hear you. Good evening to you, Chantal.
Yeah. What you've started is really appreciate. I'm a Francophone. We really appreciate. We really appreciate. It's a very good initiative.
Thank you.
First of all, I would like to know, I would like to do this investment not for myself. I just chip in a bit to see how it works. And the people I really want to push in are my children. But I can't really go on and do it without telling them how it functions, without teaching them how it functions. So I would like to know, how do we get to know some of us who are really illiterate in stock exchange and Forex? I don't know how we can manage that. If we can have documents, if we can have, even audio or videos teachings, I don't know how, even if it means paying, no knowledge is free. You pay to have your own knowledge. I just think it's just being loyal for you to ask for something that is okay. But I would have loved to have much knowledge, because I don't know how to prospect to people if I don't know how to explain to them, how to teach them, because you have to be able to teach them also.
Yes.
That's the first thing. Then the second thing is, I think when you created this, when you thought of this, what you had in mind was to boost the economy, to help your people back. And I feel that this stock exchange issue, this fortune investment is good, but I don't know how you can do to help us, like people who are having companies. Maybe you should create a platform for interaction. Maybe people who are there in Europe and people who are in Cameroon, how to have a platform exchange for their goods, for their services, and for other things. I don't know if you have ever thought about that. Thank you.
All right. Thank you for that. First of all, about the education and how you can get involved. We have an office in Carrefour Feka Food in Chinga. You can either go there, but at the end of this, I'm going to give my contact details, so you can also contact me. Talking of education, yes, we've been doing a lot of education. If you follow our Facebook page, you'll see that every Saturday, or almost every Saturday, we have live shows talking about different topics, educating people about, money, about investing, about investments, the market, and things like that. We've been doing a lot of education, and we have quite a lot of videos on our Facebook page and posts and articles that you can always refer to. But I understand what, the questions that you're asking. There are a few audios that we've made. There are a few videos as well, like this one, which I'm recording. They're always available for people to listen afterwards, so that they can at least pick up maybe what they missed during the presentation. And about the exchange platform, yes, I know a couple of people that I work with who have such. Myself, I don't, because I just want to, I believe this one, once taken care of properly, it will give people many more opportunities. But I have a couple of people who have different platforms. I have a guy called Marshall. He's got a platform where people can go to talk about their services, and they can interact with, other participants from across the world, from Europe and across Africa. He helps people to protect their intellectual property, and also even helps people raise capital, for people who have good, decent projects. So there are platforms like that. And definitely, as time goes on, if you want, I can put you in touch with some of those people. It's part of the thing that I do. It's at the end of the day, I want to leave everybody, better off than when I met them. And if that can help you, definitely I'll be willing to do that. So
thank you. Thank you very much.
Okay, Eric is asking, is there a fund prospectus? Could be nice to see how your portfolio allocation. Yes, Eric, there is a fund portfolio, a fund prospectus. We do have a prospectus. It is available. It can definitely be sent to you. And also, to add one more thing, Chantal, if you want to get involved, we have we have an application form, a subscription form. There are documents that we can send to you that you need to fill and send back to and send back to us along with.
I think you have my WhatsApp. If you can send it to me, then it will be fine. Because I run an association, and I would have loved to talk to the women about it. but I don't really know how to go about it. I'm not really Facebook. Yes. You wanted to say something? An association of women.
Yes, I'm saying, do you have my WhatsApp number?
Yes, I have it.
Okay, do send me a text, and then I'll be able to follow up later on.
Okay, thank you. Thank you very much.
About the crash in economy. Question is from your point of view, which is more preferable, stocks or forex? Okay, Anita is asking a question, which is more preferable, stocks or forex? Definitely stocks. Apart from maybe George Soros, I don't know any other billionaire who made money from the forex market, but I know almost all billionaires, including George Soros himself, they made their billions from the stock market. So definitely stocks, because of the long-term value, and also because of the dividends that you get from it. Also, the stock market is less volatile compared to the forex market. The forex market is, if you lose, you lose. In the stock market, even the value depreciates, you still own the shares. So definitely stocks. Stocks are way preferable than forex. I'm saying it out of experience. I've been on both sides. I've been on both ends, not just on the shallow entry-level retail side. No, I've been on the institutional side, and I'm telling you, definitely stocks. So that's my opinion. Yeah, Chantal, for your group, one other thing I can do for your group is I can organize a session with the group if that makes it easier for you. You can organize a session, and then you can invite me. I can speak, to the women in the group. I think that may be a lot easier, and it may be a bit better. So, yeah, guys, keep the questions coming. Keep the questions coming. Again, if you want to say something, feel free. It's 7:36. We can take maybe 4 or 5 more minutes before we close. So I'll just leave my WhatsApp number on the messaging side. If you want to get in touch with me on WhatsApp, you can definitely do. I see Eric there from Canada. Good to see you, brother.
Always, Mr. Chato.
Thank you very much. Okay, I've just put in my WhatsApp number on the chat box. So if you do have a question, or if you want to get in touch with me, you can definitely reach me on that number. All right, guys. If no more questions, I think You've done well. Thank you, guys. I think at the peak, I think I saw like almost 40 people. So thank you all very much. Thank you all very, very much. Thank you for your time. Thank you for your patience. And thank you for listening. It's always a pleasure to, share with you the vision we have for our, fellow countrymen and for our various nations. We're putting together a very solid team that we believe will, change what I think, people call the financial markets or the financial sector, not just in Cameroon, but the whole CEMAC region, and why not the whole of Africa. And I know we cannot get there alone. We can only get there when people, such as yourself, support our vision, support our dream, and, we go together. So thank you all very, very much. And as you go, I pray that God will bless you and your families. So stay well until we meet again. Thank you all very much. Thank you. Have a lovely weekend and enjoy the evening wherever you are, from Cameroon, across the UK to Canada and the US. And so wherever you are, thank you all very much, and God bless you. Goodbye, everyone.